you so much for joining us this morning. All right, so clearly there's going to be a lot of focus on the loss that was reported, so maybe we should start with that. From what I can see, the Nigerian unit was recorded a loss due to two major factors: restructuring and, of course, high finance costs and FX losses. Can you just speak to, maybe starting with the FX losses, because many would suggest that the Naira has been relatively stable, so how come you're making FX losses?
All right, so thank you, Wale, for inviting. Yes, it's true that we have published a loss for this quarter. I think there's a number of good news, and we'll come back to those good news. The loss is, I would say, mainly related to the fact that in Nigeria there's different markets. One of the markets is the NIFEX market, and the NIFEX market has gradually eroded to converge to the NAFEX market, and this has occurred by mark-to-market of our liabilities to this devaluation effect.
Right.
All our debts today are hedged. We have implemented the refinancing plan that has been approved during the EGM on the 25th of September. And now we have almost $300 million of debt hedged at 65, for 12 months now. So going forwards, we see that the company will be less exposed to FX losses.
All right. I'm sure that will be great news to some shareholders. And pointing to some of the good news as well, the South African operations improved with the company scaling through to record its first positive EBITDA report in over a year. I'm sure that's great news, especially because we know that South African operations have been a major drag on earnings. So tell us what is happening in South Africa and what's the outlook?
So South Africa, that's part of the good news that we report during this quarter. So for the first time, South Africa is out of the red, as you said, after 4 quarters of negative performance. So in terms of business, the volume or the activities are quite slow still currently. We expect that during the Q4 the things will improve. But the major point is that we are doing the transformation and the turnaround plan, and our cement activities and aggregate activities are delivering the performance. Cement activity benefited also from price increase, and it's a 15% price increase compared to last year, same period. So there are positive signs in South Africa, and we strongly believe that South Africa will continue to deliver stronger performance going forward.
Right. Although some analysts have pointed to potential sustained downtime at the older SA plants expected by some analysts that have looked at your business. What's your reaction to that?
No, we are doing what is needed to be done. We said we're going back to fix the basics. There is a strong technical team solving the problem of the plants. We have done a second wave of the transformation and the restructuring. We will continue to restore the profitability of the cement plant. Same for the aggregates and the ready-mix activities. And thanks to those measures, and there are some drastic measures, South Africa will return to profitability. It will take time to be back to the level of the best in class, but this is gradually where we're going to.
Okay, all right. Let's talk a bit about the rights issue, because to some extent that is one major event that hopefully should address your financing costs, which also dragged earnings in the third quarter. So where are we on that transaction? Is that still going ahead this quarter?
So on the rights issue, the rights issue, as I said, was approved on the 25th of September by the EGM and by your minorities shareholders. The plan is to have a approval by the SEC very shortly. We anticipate that before the end of October we should be ready for launching the rights issue. Right. Now, you talk about profitability and profitability in Nigeria. I think there's it will contribute to improving the performance and the profitability of the Nigerian activities. But moreover, Nigeria, we continue to demonstrate that our profitability is very strong. And for instance, this quarter we have reported a growth of our sales volume by 17%, while the market is increasing by 12%. So we have a very strong performance thanks to a road to market and a new commercial strategy, but also we are delivering performance in our logistics, in our energy sourcing. For instance, alternative fuel is a very strong way for us to improve industrial performance at a much more lower cost and improving our sustainability, because, as you know, alternative fuel is coming from waste, old tires, rice husk, or biomass. So really, in terms of sustainability, is something that improves our footprint with our local communities.
That's certainly great news. And obviously, that hopefully will help to sustain the efficiency of the business going forward. So will you be investing more into that efficiency, say, over the next 2 to 3 years? What are your plans in terms of expansion? Of course, we all know that your competition has done significant expansion over the last decade. You have made some as well, but what are your plans going forward?
So in terms of investments, we have already invested a lot in terms of alternative fuel, which is a best way to improve profitability at a relatively low cost. All our plants, most of our plants have those capabilities, whether it's in Iwekoro, in the west, in Chagamu. And now we're introducing this also in Ashaka. We hope that in the future we'll be able to do that also in the east. We are investing in debottlenecking our activities, which is another way of actually increasing capacity. And we are considering expansion. We'll see how the economy and how the cement market will evolve, but we are getting ready.
I just want to get into that. What are your expectations for the economy? Of course, it's still very slow growth in terms of GDP right now, but especially after the elections, what's your view on the market opportunity here?
Nigeria, I mean, the fundamental of the growth in the cement industry remains valid for Nigeria. You have population growth, 2.5% per annum. There's a big infrastructure needs, housing needs, power. You find cement in most of the activities related to the growth for Nigeria. So we are very confident about the growth in Nigeria. Now, what is the speed? This will depend of course, on the oil price and the revenue generated by the oil activities in Nigeria, and by the capability to capture a further growth. And it's true that Nigeria should aim at having a higher GDP growth that will sustain and support our activities.
All right, Bruno, thank you so much for coming this morning and